Here's the story of a bearish trader who was selling into every single bounce. All his orders hit the bid. Such a sucker, sometimes you buy the dip. It's the story of a bullish trader who was buying each down tick he saw. He averaged down and rarely stopped out on the edge of blowing up. Until one day they subscribed to Routine Trader and realized they can do both buy and sell. That there are two sides to Mr. Market, and beating him both ways is pretty swell. Yeah, pretty swell, so very swell. Beating Mr. Market both ways is pretty swell.
Cheers to a new trading day, retail trading team. This is Mastro coming to you live from Puppet Show Central, not beating the market as the theme song implies, but we're still here for that routine briefing. So we're going to jump right into that, and I'm going to share my screen here, and we'll start with our execution chart, see what we got going on there. Alrighty, so I have to fix some issues with pass. I know it has been the choppiest few days and the choppiest week of the choppiest month of this current regime, yet I do not like the emotional side of kind of my stop mechanics there. So just to show you what I mean by that real quick, I'll show you the change I made. I'm just scrapping it from the beginning here as I try to mechanize this. I've been doing this myself with the, where is it here? I've been doing this myself with a little more subjectivity. It was working great. And then as soon as I tried to objectify this, we've been having some issues the past few days. So just to show you what I changed there, all I changed was this right here. So I had stop at lowest low or highest high. That was a little subjective. And the past 2 days in a row, I have gotten within a point of that stop, and I haven't given these a lot more room, so stops are a little more painful, and so I'm just going to make that a little easier on my psyche and just keep at that max stop of 2N. So a couple of these stops have been beyond 2N. Nothing crazy. It just basically went from up a couple grand to flat since starting the log. And also since trying to mechanize it with my live trading, and really it's just been frustrating, and I do not like frustrating strategies. That's why I love Fabio. I never have to even think, I just execute, and so we're kind of trying to bring that back to the pass system here, and now I just added that 2N. So you're going to notice that the trade log went from 5 trades, I don't remember how many were on it, to 0, and that's because I now have to incorporate this new mechanic. So just to kind of review what happened to me overnight. So I was short from 29. Next level I had from yesterday was that 18 level. My stop was at 44.25. And the night before I had a very similar thing happen on the long side. It was also within a point. So you can see today's high so far is 44.75. Taking out my stop, and that actually triggered a long. So that was just, an ugly and frustrating beginning of the day, and I don't like that. So I'm cool with that stop in the morning, that long stop that we had there, and we'll see what happens with this short position that got triggered as well. It's really choppy conditions, and so I just wanted to bring that to your attention. So as you can see here, I have currently a position I'm shorting. I thought that we accepted below that 35 level, as was evident by 3 10-minute candles. That's 30 minutes. I usually look for about 15 minutes of acceptance. Yet we're not seeing that today. So it's really no surprise if you look at the internals. They are more bullish than bearish, I would say. Thing is, yesterday they were extremely bearish, and that didn't really come into play until the end of the day. So why am I short? I'm not kind of ignoring those internals right now, to be honest. The only thing that I'm going to be looking for is on a possible trend day. I'll be watching those to confirm that, but everything's broken. I mean, we're at the complete and utter mercy of some type of algo right now. I do not know what it is. This is not normal. I don't care how much Brownian motion you're supposed to see in a market. You do not see anything like this tape usually. So we're in just kind of the choppiest, and I just think utterly random tape. And so that's why I think it's super important to stay mechanized, and it's kind of why I wanted to adjust that so as not to tilt, which has been pretty close to tilting today. I will not, but if these shorts get stopped out, I'm gonna have to take a deep breath and go to church or something, because boy, it is a tough market right now. Just kind of going from that what happened yesterday with that cute little sell-off at the end that we completely unwound on no volume. Again, we are at the mercy of some type of bigger entity right now. I mean, we're always at the mercy, obviously, of a bigger entity, but there's something going on under the surface. I'm not going to speculate what it is. But if you're having issues right now, as someone who has been day trading for 5 years, I can tell you this is worse than 2017. Oh wait, no, 6 years now. I can tell you this is worse than 2017, because at least in 2017 you did have that low volume, but you had kind of that direction, and I think, if I remember correctly, it was a while ago, the levels were respected a little better. So we're in a special type of regime right now. Very important to stick with your mechanics and not try to force anything. And expect higher costs of doing business. It's just the market we're in. So that's enough of the pep talk side of things today. We're going to go ahead now and jump into the warm-up document. So I'm going to go ahead and share my screen there. Okay. So what do you got going on here? You do have that up overnight inventory once again. This time is a little balanced, so it was looking like it might have been that long, but you did have that retrace at about 3:30 a.m. Eastern, which kind of gave us that balanced look. Really unimportant. These inventories have just been, not indicative of any type of intraday tape action, and really neither has that first 30. So, like I said a little earlier, I think I said this audibly. I was thinking if I didn't say it audibly. The reason that I was so quick to take the acceptance play, even though we had those two green candles. So really, the time thing is the biggest component for me for acceptance. Yet usually I'll wait for some type of lower low or something. This open drive, I think, really gives a good risk reward here. So my stop is about 12 points, well within that 2N stop. And although they have been unwinding literally every open drive so far this month, it doesn't. So, all right, yes, gambler's fallacy potentially here. I acknowledge that. Yet these types of opens are extremely high probability, long-term big picture. Like I said, I don't know the exact numbers, but it's above 60%, and I dare say above 70% big picture. So I'm going to keep taking it, especially when the risk reward is there, when you have the acceptance look as well, and when you have just this repeated testing of the same bloody level, the same pattern every single day. I think it's more likely to fail than not. And really, as long as you have tight risk management as a futures trader, as long as you have that 50-50 probability, and even less sometimes, you can make good money from my experience. So that's what I got going on here. If that does get stopped, I'll be looking for the breakout, and that's what I'll be looking for there. So that's why I am short now. The acceptance plus that open drive plus the proximity of that morning high, I think, creates a good trade. Although we are definitely in that dip buy regime, and although it cannot be denied that the internals today are more bullish than bearish. Yesterday they were extremely bearish, and that didn't matter. So that's, like I just said a little earlier here, that's why I'm really only looking at those for the confirmation of trend right now in this current regime. We just gotta trade it with the highest probability possible. Blah blah blah. Chop. I've said it like 5 times. You get the picture there. So speaking of pictures, TPO, really nothing to see there. I'm going to show you on that chart really the zone that we've condensed into on that chart, and just that past trend, that 4135, literally the same thing. I think literally is the word of the day that we've been seeing for several weeks. 4120 SPX pivot, rinse and repeat, buy the dip. You know the deal. So right now, I still am saying that we accepted below 4135. We're now in so we had a candle close above that level and a second one, and now we're kind of in that third, suggesting potential acceptance back above. So it's those choppy conditions. That's why I have the stop above 45 there. They're really going to have to move to shift my perspective on that level. Yet if we do get above 45, unwind that open drive, I think that 35 becomes very decent support, especially if you're an options trader for those short puts closer to the money if you are so inclined there. So besides that, we have not closed outside the expected move for several days now, several days in a row, and you can see where those expected move zones are. 4100 about our favorite number, 4099. I believe we actually bounced almost exactly from this specific number last time. Then the upside, 4146. Yet of course we're still just hanging out around 4120 to 4125. So those are the zones there. I got the levels included for you. Those will change throughout the day if and when we have a break up or break out. I'll be breaking up with the market if we have a breakout probably. But yeah, breakout or breakdown, I will add relevant levels as that happens, and also this TPO. This TPO is always changing, especially in the current market. So if you want to stay updated, check out the description or check out the link in the description of this video for that fun around the warm-up document. So that's all I got. The warm-up document. We can go to the tape action finally as the bulls try to continue buying the dip here. As per usual. Let's see what we got going on in macro chart. Just a mess. So yesterday's close, we broke below that trend line, and we closed below the trend line ostensibly, as they say, ostensibly, whatever the correct pronunciation is, denoting a breakdown. So I've heard there's a bunch of different people talking about a bunch of different patterns. You got your megaphone people, you got your diamond, bearish diamond figure, whatever the heck that is. And really what I'm just watching is the reaction to these trend lines. So we have a Monday was an inside day. Yesterday was pretty much an inside day. We kind of got that break at the end of the day. I don't even consider that anything because of the overnight action. So really a double inside day. Now we're having what is developing into a triple inside day. So this thing is about to break. I can guarantee you I will stake my reputation on the fact that we have a big move at some point this week. I have no idea which way we go, but you can see here we are just so condensed, so crushed, so incredibly complacent with this range. It's the tightest range we've had in years. Something's going to happen at some point this week. I don't know when. I don't know where we're going yet. We're definitely in crunch time, if you will, quite literally relevant or relative to those trend lines. So we'll see what happens there. Just kind of keeping that in mind, watching the highs and lows from yesterday is kind of a repeat of what was discussed, what I discussed during yesterday's briefing, watching the SPY high and low from prior day. So again, same thing today, watching prior day high, prior day low, and watching how price reacts to both of those. So I believe we had a breach of the prior day range earlier this morning, but I want to see that show up on the SPY chart. What I'm watching here is a SPY chart. So those levels, if we want to be specific, going to be 413, right about 410. So a few cents off each. You can look at it on your chart to see exactly where they are, but about those levels, prior day high, prior day low. So super important on the macro front there. The next chart I want to look at, of course, going to be TPO. As I discussed earlier, this is the make or break range right here. In my opinion, it's down to about 20 points, 48-ish. Really, let's say this morning, I think this morning's high is going to be the most relevant level there. So really this morning's high and overnight low at about 41.20. That's it, man. Men and women. It's 45 to about 20. 25 points represented by this box, and I think when one goes, that is going to lead to the move in one direction or another. Simple enough. You can see we got a poor low for this morning, so right, that low that we put in at about right on schedule at about what, 10:15ish. That is a poor low for now, so we'll see if they go clean that up, and then more importantly, that poor low at about that 41.12 area from a couple days ago. So that's what I'm looking at in the TPO chart. Volatility remains to be really irrelevant to me. I keep looking at it for that potential reclaim look yet we're just kind of hovering around that 2020 area. Nothing significant again until we break 1960 for that excuse me, for that move to the upside, or at least 2180 for that bigger move to the downside. But Valto is extremely depressed. I know that today we have that VIX expiration. Maybe that was the cause of the nice little bear trap at yesterday's close. Regardless, that's kind of what we're watching there. Volatility irrelevant until we either lose 1960 or we get above 2180. Pure price action and just watching those levels, 45 on the ES and 20 as well on the ES as the day develops. That's really it on the price action. So just to review, yesterday's high in SPY, yesterday's low in SPY, everything else pretty much noise. So we'll keep it simple there. Just a couple of macro viewpoints here. I've been trying to incorporate a little bit of this. So a lot of this data comes from Tier 1 Alpha, and the rest of it comes from the beautiful land of Twitter. Some of the more important points, you look at GDP growth, slowing. You look at the utter market cap distortion relative to the fact that most stocks are not having a good time in April and May 2023, whereas the 15% of stocks, your FANG stocks, if you will, are carrying the market. That is an interesting and I would say unprecedented level of market cap distortion going on there. Interesting macro point. And we're also seeing kind of an imminent earnings recession. Potentially the Home Depot earnings event yesterday was a significant harbinger of that. We'll see if that carries on, but it seems to be that we are in the infancy, as Tier 1 Alpha said, of an earnings recession. And then finally, just because we don't want to be too bearish, even though I think you can tell my bias, could be just talking my book though. In any case, the one bullish macro point that I think is pretty key, I retweeted this on my Twitter, is if you look at the number of net shorts in the market right now, it is really high. So that is, I think, speaks for itself. And if you want to see a little more cute little graph about that and look into that, you can go see that retweet I had on Twitter there. So we're going to end the briefing with those fun little macro stats. We'll see what happens the rest of the day. Again, one more time, yesterday's high of SPY high, and yesterday's SPY low, correlating to ES today. Not quite, it's a little beyond that, but really the main range watching for ES today, that 45 to 20, until price escapes one of those, really just a more choppy noise. So we will see what happens. That's all I have for you. I'm going to send that newsletter out right after this, get it out by 11, and I'll be on Twitch at noon trying to DJ, bring the vibes, bring the good energy that the market refuses to give us. If anyone wants to come hear my trademark rough transitions, you can go find me there on Twitch at noon. Besides that, on Twitter as always at Routine Trader, and I appreciate any engagement via reply to the newsletter or in the comment section of this video. And if you did enjoy today's content, please give it a thumbs up. If you want to see the market get out of this range, let's give it a nice thumbs up. I appreciate that as well. It helps the YouTube algorithm. And I just thank you for hanging out regardless. So we'll come back tomorrow, see if Thursday doesn't bring some fun. Heck, we'll see if Wednesday can't bring some fun. There's plenty of day left, and I wish you all to have an excellent rest of your days.